Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London sugar markets. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or any related items on these my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, ice raw sugar in New York. The main recent pattern here until the start of August had been the large, old and big, bright red November 23 stroke September 24 through to late June 2026 bearish shift pitchfork. The market had for most of July had been mainly wrapped around a breached and then broken bright red upper time, currently at 1421. But with all three moving averages, the short medium currently at 1502, the medium moving average currently 1473, and the long moving average currently 1471, back then all squeezed together into an area of 0.07 of a cent, and all three of them propping up the price. Something had to give, and it was on the upside. Additionally, 7 weeks ago I highlighted a new pattern building up, a bright green late March to end June descending triangle pattern, utilizing lows of April and June as the base, a bright green lower trend line currently at 1329, and a late March to end of July bright green upper downtrend currently at 1386. Now I embraced this pattern enough that I highlighted two descending triangle patterns seven weeks ago, and I laid out the patterns and targets for both. Thus we had a smaller mid-April to end June action, utilizing the same base for both descending triangle patterns as the April 26 low action at, and a second pattern being the longer term end of March to end of June action. First pattern had the primary target X in the 16 even area, a target we reached late 3 weeks ago. The secondary hard to reach target X1 up in the 1682 area reached 2 weeks ago. Meanwhile, the second pattern had a primary target X2 up in the 1610 area, a target we also reached late 3 weeks ago, and a secondary hard to reach target X3 up in the 1703 area, a target we also reached 2 weeks ago. I said on these targets over the last few weeks, and I quote, "Even a cursory glance can show that whilst the primary targets still are doable, the secondary targets look out of reach, and with time and the market not exactly enthused to try higher, I considered retiring all topside targets for now, but I didn't." You see, this is where a new potential pattern came in, one I discussed 4 weeks ago, so that's actually now 7 weeks ago. 4 weeks ago, and it was regard the whole late May today action as a possible quite large double bottom that is still in construction. If, and it is a big if prices to manage to reach up to the primary targets X and X2 and have consistent and consecutive closes over them, then we would have a double bottom pattern here, and quite a large one, with all the bullish implications that may have. End of quote. Where we reached those targets X and X2, and 2 weeks ago I started on targets on the top side for this double bottom. Thus I laid out 2 weeks ago a primary target X4 up in the 17 even area, a target we've already reached, with a secondary hard to reach target up in the 1760 area, a target we also reached late last week. Now as part of this, during July a new stroke old pattern re-emerged. This was a mid-April to late June dark blue bullish Andrews pitchfork. And I drew in an effort to see some direction in this market on the upside. I have to say this pattern has acted pretty well, with prices punching up through the dark blue middle time below, currently at 1671, and utilizing the same dark blue middle time 2 weeks ago as a base for a further attempt higher, but stopping shy of testing the overhead dark blue upper time, which is currently at 1852. Though I think the 21st century 50% absolute Fibonacci line at 1809 had more to do about that, but we'll leave it. So, having achieved all topside targets, what now? Well, the dark blue Andrews pitchfork is still the main showrunner here, and I'd watch that to see what could be achieved on the upside. But once again, note the 21st century 50% absolute Fibonacci line above as resistance, as well as a little high up the 50% Fibonacci line of the April 20 to November 23 move at 1859. If on the other hand prices do try and head lower, obviously watch the dark blue middle time below, but also the congestion around 1635, stretching possibly down to the late March high at 1610. If prices drop below that, well, then it altogether becomes a different market. Ice Europe white sugar in London. The main recent pattern driver here had been the dark blue mid-April to late May bullish shift pitch walk, with the market finally piercing and breaking the dark blue upper time, currently at 509.70, late 3 weeks ago, as well as the purple neckline extension, currently at 504.60, of the April to June 2021 head and shoulders pattern, timing it just right so that it would take both of those resistance outs at the same time. 2 weeks ago, we saw the market reuse both of those resistances as supports for a further move up, tackling and breaking up through the bright red neckline extension, currently 519.80 last week, and riding up through a sparsely populated area through the March 2017 high at 548.70, and finally halting late last week with what looks like a pipe top at the February 2017 high at 565 even. Just above this we have the 50% Fibonacci line of the big November 23 to February 26 move at 574.40. The pullback low we have seen is once again travelling through a sparsely populated zone until the bright red neckline extension, with support and congestion, some of it dating from 2017 down to the purple neckline extension. It is worth now recapping some of the patterns that were building up prior to the move higher. Thus, I said 2 weeks ago, and I quote, "There were also other more interesting patterns here, oddly related to the dark blue bullish shift pitch hawk, and that is a bright green February to date uptrend, currently 467, sharing the move with the dark blue lower time of what was originally a sideways triangle, and then more recently became part of a mid-April to late June, and then mid-April to late July ascending triangles." So there's two of them there, with the top being highlighted also in bright green, shallow downtrend, approximate to the February 2020 high at 456.70. Thus, for the sideways triangle, we had a primary target of 473.70, a target already achieved, and a secondary harder to reach target X up in the 495 area. End of quote. For the present guidance, so we're back to the present now, this secondary target was achieved 2 weeks ago, and I carried on, and I quote, whilst for the ascending triangle we have a primary target X1 up in the 493.30 area, and that's the end of the quote there. For present guidance, this secondary target was also achieved 3 weeks ago, and I carried on, and I quote, and a secondary and still open harder to reach target X2 up in the 508 area. End of quote. This secondary target was reached 2 weeks ago. I did one final point 2 weeks ago, and I quote, "One important difference to note here is when compared to New York Sugar is there is no possibility of a reinforcing double bottom pattern here as seen in New York Sugar, I'm afraid. Something I have mentioned before." End of quote. So having reached all these topside targets, what now? Well, it would not surprise me to see prices drop down to support we saw 2 weeks ago between the bright green red neckline extension and the purple neckline extension. This was a consolidating zone 2 weeks ago, and it would not surprise me to see prices fall down through the sparsely covered zone down to the support seen 2 weeks ago. However, if prices drop below that, well, that altogether becomes a different market. Sugar white premium spread. The key pattern here continues to be the dark blue February/March to date ascending expanding wedge pattern. Currently it's 123.25 to 170 even. The market did try pushing up and out of this pattern a few weeks ago, but failed to close back then over the congestion at 162.75 and the 2021 high at 164.75, despite piercing it. Meanwhile, below we still have the pair of 50% Fibonacci lines from the July 2019 to September 22 move, and the August 21 to September 22 move at 128.75 and 131.75 respectively, as well as the June 2020 high at 134.25. Despite all three being pierced 6 weeks ago, we have still ended with no closes below them. Meanwhile, topside, we're once again the 2013 high at 152.75 and other significant highs seen in September 2025 at 144.25 and the July 25 and July 25 at 151 1/4, as well as the 2012 high at 164 3/4. Prices managed to close up over all of these except the 2012 high, which was pierced but not broken, and the same old dark blue upper trend line to the ascending expanding wedge pattern. Well, that capped prices nicely last week. So looking at it, the bullishness seen earlier in 2026 has been tempered twice now, with a lower high last week usually seen as a bearish sign. We also have some significant supports below the market as well. Now there's one other big pattern, and it's a major pattern that could be in development, and one pointed out 7 weeks ago. It's a really big start of Q2 2024 to date, really big double bottom, one that could be seen as a rarer W pattern. This pattern will depend for its construction on prices remaining and stabilizing over that important 180 even level. So it's far from complete as yet, and indeed has still some way to go. But it's something to bear in mind for the future, just in case. Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.